Well, layoffs are expected to hit Meta platforms today. The tech giant is planning to cut an unknown number of jobs from its metaverse-driven Reality Labs division. That's according to a Reuters report. The unit currently has around 600 employees. And Rochelle, this Reuters report specifically saying that the cuts are likely to come in the chip-making unit. But the broader question this is certainly going to point to is, where does this bet that Meta made on the metaverse stand right now? On some level, you could argue some of restructuring was expected when you consider that a new head was put in place within this particular unit. But I can't help but think of the losses that the company has been reporting here. $3.7 billion in operating loss in the last quarter, $21.3 billion in losses since the beginning of the year. Is this about Meta getting its financial house in order so they can continue that bet in the mixed reality space, or is it about downsizing a bit? That's a big question I think investors are going to be asking.
And I think it might be a bit of both. Obviously, Meta declared this its year of efficiency, so really honing in on some of the areas where it needs to cut. It made this big bet on the metaverse here, and as we look at some of the cuts here, we're expecting to see them to the silicon unit called Facebook Agile Silicon Team, or FAST. So we don't even know how deep some of these cuts are going to be eventually, but it does make us wonder then, what does that mean for their augmented reality and virtual reality push that they have, which is a huge part of the metaverse? Zuckerberg was touting the importance of having meetings in the metaverse. So it'll be interesting to see how those investments are going to change. They've been pushing a lot more focus on AI and generative AI than they have been on the metaverse here. So some adjustments here, perhaps some fine tuning on these investments, but still early days here. But as we mentioned, this year of efficiency, so a lot of changes could be on the table here.
Yeah, the year of efficiency is certainly probably key in terms of trying to understand where these cuts are likely to come from. We should mention the company did just launch or announce their Quest 3. You think about the competition the company faces, at least on the hardware side, from the likes of Apple. Meta seen as more of an affordable offering. It's a different use case that we're talking about, and they have made that big bet. They changed their company name because they wanted to place that big bet on the metaverse mixed reality specifically. So this certainly doesn't mean that they are, giving up on it by any means. The company has said that they are invested in it for the long term, but maybe a bit of reassessment is happening here, maybe some rescaling as a result of the huge investments they had to make upfront.